Moderation helps. Okay, I get it. Moderation helps. That's a little bit better way over there. All right, we're getting ready to get started. Dante, Adam Maddox, Blake. How you doing, Blake? Getting ready to get started. Give me a minute. Give me a minute. Give me a minute. Getting ready to go. Here we go. Here we go. Here we go, yo. Here we go, yo. Here we go, yo. Here we go. All right. Anyway, hey everyone. This is James from Dividend Stock Talk. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride for a safe, predictable, consistent 1% per week. Yep, I got fed up with being lied to so many times. The BS crap, the powers that be, the bankers, the brokers, the candlestick makers. BKR stock, Mr. Bill. We'll take a look at that. BKR, what the heck is BKR? BKR. Now, Bill, you might like BKR. Well, let's take a quick gander at it and see what it looks like. BKR. Now, BKR. Ah, no. BKR. Mr. Bill. I'm going to disappoint you just a smidge. Just a smidge. The reason being, I don't like monthly optionable stocks. Now, you have two opportunities here. You missed the link today. Paul, how are you today? Pakaris, back again. Cool beans. Paul, we had some issues with the email, so we're setting up a new email server, a separate one from Patreon. So more than likely, you'll get a email from Patreon and one from my own private email. That way, it will be reassured that everyone who's going to get one is going to get one. Bruno, you're new here, dude. How you doing? So anyway, Mr. Bill, as I was saying, first of all, you're new here. Because if you weren't new here, you would know I only like stocks that have consistently increased their dividends to their shareholders for more than 20 consecutive years. And they have to have weekly options. This one here that you like, BKR, it has monthly options. And monthly options, contrarian trader, how you doing? Monthly options just don't work in this trading strategy. Now, there are hundreds upon hundreds of trading strategies out there. This is just one. This is one here particularly I created for my 9-year-old daughter. Now, back in 2008, when my 9-year-old daughter was 9, she's actually taller than me now, and she's 25. Can you believe that? I have a 25-year-old? Who the hell in their right mind would give me a 25-year-old? Oh, I know who it was. I know, it was Lisa. It's all Lisa's fault. Anyway, oh yeah, so when I say, all right, let me give you a quick rundown of what we're looking for. This way, some of you guys out here now will not give me anything that's going to be wasting our time. Number one, this trading strategy, Happiness, how you doing? This trading strategy was, like I said, created for my 9-year-old daughter back in 2008. She crawled up on my lap and said, Daddy, can you teach me how to trade? I said, sure, why not, honey? Let's figure it out. So here's the challenge. With a 9-year-old, it has to be simple, safe, predictable, consistent, and no way for her to lose. That's a pretty good trading strategy, don't you think? Simple, safe, predictable, consistent, no way to lose. Well, cool. Let's see what it looks like. Number one, never buy something you do not understand. Number two, never sell at a loss. It defeats the whole purpose of the whole game. Number three, make sure the company is consistently profitable. This is a big one. Consistently profitable. Now, there's 9,668 or 64, whatever, a whole shitload of stocks that you can invest in at any day and time. So why am I only wanting to look at the companies that have consistently increased their dividends? Well, it's my money. When I'm investing my money, I want to be able to sleep at night knowing my money is safe. Well, if a company is consistently profitable for more than 20 consecutive years, hola, go it. 20 consecutive years. Well, then they must be doing something right. So, SCHD, hell no. Don't bring up that piece of crap to me, please. If you're bringing up SCHD, I know for a fact you're not doing your research. If you took a look at what kind of dividends they are paying, they're up, they're down, they're up, they're down. There's no consistency whatsoever. And then, to make matters worse, SCHD, take a look at what the rate of return is. What is it, 3%, 5% per year? Hell no. Junior, how are you doing? Paul, I missed that. Paul, what did you have to say? I was blown away today watching you roll into next week. Never thought of that. Brilliant. Thank you, Paul. It's a cool strategy. I mean, think about it. If you're looking like you're going to lose, you have a possibility, tuck and roll. Tuck and roll out to another week. Save the thoughts. Micron. Now, we looked at Micron. We made a bunch of money on Micron a couple of days ago. Today, it's not looking that good. We're going to look at that in a second. Hold on. Let me finish up with my spiel. Okay, it's one of those, what do they call it? Disclaimer thingies, so you guys got to know. So, as I was saying, 5 simple rules. Number 1, never buy something you don't understand. Make sure it's something you want to buy and hold on to for a long period of time. That's number 1. Number 2, never sell at a loss. It defeats the purpose. Number 3, make sure the company's consistently profitable. Now, you have a couple opportunities to figure this one out. Now, like I said a while ago, there's over 9,660 different companies. Okay, how do you choose? Well, I want companies that are consistently profitable, 20 years or more. So out of those 9,600 companies, there's only about 300 that are consistently profitable for more than 20 consecutive years. You ready? Hold on one second. It's not one problem, it's another. This is what you get when you don't take medication. You get to be healthy and not take any of that medication. I hate it, hate it, hate it. All right, here's your choices. Number 1, you can go and read all the quarterly reports, all the annual reports, dive through years and decades worth of information. Or you can cheat. What do I mean? Well, here's the thing. If you take a look at the bylaws of all corporations, they figure out what are they going to do with the profits. You know, line number 33, subsection A, what do we do with our profits? Here's the thing, 2 different kinds of companies. One company will take all the profits and put it back into, hold on a second, there's no sound on the stock chart channel. Uh-oh. 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 Hello, hello, is this thing on? No, it's not, so let's get rid of this. Let's get rid of that. Apparently that's not working. So let's change the audio. Sorry, give me a second. I got to change the audio. Audio. Here it is, audio. Okay, get that. We're going to go with this audio right here. Hello, hello, hello. There we go. It's working now. All right, so that being said, where was I? Oh, here you go. Rahul, here lost today. I have no idea what that means. Okay. Profits. Make sure the company's consistently profitable. This is rule number 3. How do you figure that out? Invest in farm agriculture. Yeah, no. There was a law saying no, was not. Rule number 3. Make sure the company's consistently profitable. I like going directly to the profits. Now, you have 2 different kinds of companies. One company's going to take all those profits, dump it back in to the company for capital growth. All right? All right, you got that, Kevin? Great. I'm not looking for capital growth. Seriously, is that weird? We are in a stock market investing channel, and I'm not looking for capital growth. Isn't that crazy? What am I looking for? I am looking for cash flow. Can you say that with me, everybody? 1, 2, 3. Cash flow. Yep. Anyway, cash flow. I don't care about capital growth. Cold calling is the only way. Yeah, well, I sold you. Okay, whatever. So, yeah, okay. I'm not there talking to you if you're going to be spewing out gibberish. Okay, I want good, solid questions, please. Now, let's get back to the profits. I'm not looking for capital growth. I'm looking for cash flow. I'm 60 years old. I'm retired. I have X amount of dollars. I take that X amount of dollars, I put it here, and I make a return on it, 1% per week. That's what I'm looking for. That's what I'm sharing with you. I have a lot of trading strategies in my head. I'm only sharing one of them. Because one of them, it's simple, safe, predictable, and consistent. And no way to lose if you do it right. Okay, the only way you're going to lose money if you do something wrong. Okay, number 1, never pick something you don't want to hold on to. Make sure it's a good company. Make sure you understand what they are and what they do. BKR, I have no freaking clue what they do. I've never heard of them. But you want to hear something funny? I've heard of Ford. I've heard of General Motors. I've heard of AT&T. I've heard of Dell. I heard of Caterpillar. I've heard of John Deere. I've heard of Bank of America. I've heard of Wells Fargo. I've heard of Capital One Finance. I've heard of Estee Lauder. I heard of a lot of companies. There's about 300 companies I look at. If I don't know who they are, okay, Glengarry Lee, oh hell no, get away from me, dude. Seriously, don't be putting up crap like that. I have no desire to hear that. What I'm looking for is safe, predictable, consistent 1% per week. So for older folks, bonds would be best buy for younger. It's through reinvesting dividends. Ha ha, wow, who said that? Osvaldo? Osvaldo, you can take that advice and insert it rectally. You know what that means? Okay? Okay, I haven't seen a single bond that pays over 30%. Why the hell would I invest anything that pays less than 50%? That's not what this is. Thank you, Redneck. Keep him in line. You guys keep these people in line. You know what? I'm here giving up my time to help you guys out. And every once in a while, you get somebody who spews out crap. I don't want to hear it. Seriously, if you're not going to contribute to the conversation in a positive manner, I don't want to hear it. Seriously, you're just wasting our time. And I don't want to hear your sad sob stories. Okay? We're here. I'm showing you a safe, predictable, consistent 1% per week. The number one thing you should be thinking of is, does it make sense? Larissa, we're going to get to that in a little bit. Okay? Now remind me a little bit later, I have to go through the disclaimer so everybody knows who I am, what I'm talking about, blah, blah, all that crap. Just say, this way nobody's misrepresented and nobody's misinformed. I tell it blankly just how it is. I don't hold any punches because I'm from Generation X. I'm sure you guys know who that is. We really don't care about your feelings. I really don't. This is not a safe space. Okay, this is not you're not going to get a participation trophy from me. I'm not going to send you a little letter in the mail saying, thank you for participating. Here's your ribbon. Hell no, that ain't going to work that way. Okay? Now, I come from a time where if it ain't broke, don't fix it. If it works, leave it alone. Okay? Safe, simple, predictable, consistent 1% per week. Let me go through those rules again because I got sidetracked. I admit it, have ADD, which is adult. I can't concentrate, I get distracted easily. I rolled over Siri from last week to the 224.5 strike was the best move. We're going to take a look at Siri in a little bit. Let me write it down. Siri, I might not be able to get it today. I got like 20 or 30 of them to go through today. We'll see what I can do. You're saying I can invest $100,000 with your tips. First of all, NB, I don't give tips. I don't give tips. I don't give recommendations. I give facts. That's it. Okay, you give me a stock symbol, I will put it up. I will read to you what the numbers are. I will go through the motions. I will show you what I do. If you decide to do what I do, that is you. I do not give tips. I do not give advice. And yes, you are right. $100,000 will give you roughly $1,000 a week. That's 1% per week if you do it properly. Remember, it's created for a 9-year-old. So here's the challenge. A 9-year-old trading strategy. Made for a 9-year-old. Simple, safe, predictable, consistent, no way to lose. All kind of nice, neat, fun stuff. However, how do you go wrong? Well, you go wrong by being a freaking adult. Adults have a way to fuck up everything. Seriously, they do. How do I sign up? NB first. Don't be so quick to jump the gun. I want you to sit back, relax. I'm here every night from 9 o'clock all the way until 11:30. I need to know, first and foremost, that you understand what it is I'm talking about. All right? Now, if you really want to have a conversation, you really want to sign up, great. DM me your phone number. I will give you a call personally. Be leery. There's 26. Somebody informed me today that one of the scammers got their account banned. So there's 26 people pretending to be me. So more than likely, you will get an email, a text, or something from someone else claiming to be me. That's why I tell people, you want to talk to me? DM me your number and I'll give you a call. Okay, user 38110, blah, blah. Would you need to invest the entire 100K to make $1,000 a week? User, let me think. Let me see if I can explain this to you. Hold on. because apparently you don't understand how money works. So if you invest your money, however much you invest $5, you get a return on the $5. You invest $5,000, you get a return on the $5,000. If you invest $100,000, you'll get a return on the $100,000. When I say 1% a week, 1% per week, average. Okay, I'm going to show you the numbers of actually the trades I've actually done. And we're going to actually do a few trades so you see how it works. There's a few things I need you to understand. Number one, does it make sense? I could honestly care less about your situation. What I care is about, am I explaining it properly? Does it make sense? If we're only buying good quality companies, we're talking household name brands. ExxonMobil, Shell, Bank of America, Hewlett-Packard, IBM. Companies, oh, wait a second. This might be a little easier. Let's actually take a look at some of the stocks I take a look at. All right. Let's get out of there. Let's go down to this list right here. This is Warren Buffett's list. Okay, I admit, I cheat. I took Warren Buffett's list, I put it into my little thing, and I trade the same stocks Warren Buffett trades. Terribly sorry. Call me a bad person if you like. But here we go. American Express. Okay. Bristol Myers Squibb, you may or may not heard of that. Globe Life, I'm pretty sure you've heard of that one. They sell life insurance. I'm going to get to that question in a minute. MasterCard, everybody's heard of MasterCard. Verizon, everybody's heard of Verizon. AbbVie, you may or may not heard of it. Okay, they have been around for over 100 years. They're a dividend king. They've increased their dividends for more than 50. That's 5 decades. Procter & Gamble, another company over 100 years old. Another company that has increased their dividends for over 5 decades. Bank Mellon, may or may not heard of that one. Wells Fargo, Aon, and Alley. Those two you may or may not, but they're all on Warren Buffett's list. So my philosophy, hey, if it's good enough for Warren, it's good enough for me. So, a couple of things you need to understand. 1, does it make sense? 2, do you like the company? Do you like Procter & Gamble? Do you like AbbVie? Do you like American Express? These are very important questions because when you're taking your money, if I drop below 55, we're going to reboot. And that's just silly. We were at 200 a little while ago. Maybe I irk people, get on their nerves. I say things like, and people aren't quite ready for me. I've been told I'm a acquired taste. I don't sugarcoat anything because we're talking about your money. Okay? Does your banker sugarcoat it for you? I'm sorry, sir, but we'd really like to do this for you, but this is no. Okay, talk to me like a human. Talk to me like an adult. Sorry, dude, you fucked up. You can't do it. Simple. Don't sugarcoat it for me. I'm not that fragile. All right. Missed all these questions. Can you spread out the 100,000 across several stocks? For your information, James is legit. Thank you, cardiology guy. I average 2% a week. Good damn. Good for you, brother. James, you're a really nice person. Yeah, I'm really not. I just appear that way. So, as I was saying, cardiology guy, thanks for that. I'm glad you act 2% a week. Awesome for you, dude. That's cool. You keep going 2% a week, dude. That's 100% a year. So here's the thing. Never put all your money. See, he's mentioning something about can you spread it out? Well, sure you should spread it out. Never, ever, ever put all your money into. Never bet all the money on one pony. No. I made a mistake. It cost me $91. Listen closely. Ready? I made a mistake. Cost me $91,000. Not 91, not 9,100, $91,000 because I thought I was smarter than I actually was. I put all my money on a certain company, and if it went the way I thought it was going to go, I would have made a lot of money, but it didn't. It went the opposite way. I lost everything. Okay? Now, don't do stupid shit. Don't put all your money in one trade. Don't put any money. Don't invest a single penny until you've at least paper traded. What does paper trading mean? Well, it's kind of like Monopoly. This right here is called Think or Swim. Now, it is a trading platform created by a professional trader. Okay, I've been using this trading platform for over 20 years. Tom Sosnos, he's the guy who owns Tasty Trades now. Freaking brilliant guy. He created this software. He sold it to TD Ameritrade for an ungodly amount of money, and then TD Ameritrade got bought out by Charles Schwab. But you can download this for free, okay? You can use it for a short period of time, but I'm letting you know Charles Schwab would like you eventually to open up an account with Charles Schwab to use their software. But open up a paper trading account, make the trades on kind of like, it's like playing Monopoly, but with money. Should I invest in Chinese companies? Yeah. That's funny. He wants to know if he should invest in Chinese company if Kamala Harris wins. I don't do politics, so please don't ask me about politics. Don't ask me about cryptocurrency. Don't ask me about Forex, futures. The only thing I invest in is dividend stocks that increase every single year and weekly options. Weekly options are a must. This one right here that Mr. Bill asked me to take a look at, BKR, I have no idea who they are. Okay, they're monthly options, which means I can only do it once a month. That's 12 times a year. I don't know about you guys, but I have bills that come due more than once a month. However much money you think I have, Slangy, we're going to touch on that subject a little bit. He wants to know if medical things, yeah, no. I don't isolate by industry. We're going to talk on that in a little bit. However, what was I saying? Oh, shit. I get sidetracked a lot. Gold is not the greatest. Try to move it. Not very liquid. How much did it cost you to open up an account? Well, I opened up an account for my grandson for $50. Okay? I started 20-some-odd years ago, 12,000. Now, someone just mentioned something about gold. Gold is great as a storage of wealth. Okay? It's not very great. You cannot sell options against it. It does not give you cash flow. It makes a great paperweight. It does. But if you're looking for it to use to grow your wealth, no, it doesn't work that way. It's a storage of wealth. Okay, so let's keep on going. More questions. Ooh, I got 55 questions. That's not skill. Oh, gee, I have no idea what that means. Zebo, do you still get dividends while selling covered calls? Okay, I don't know if that Zubo, is that a ZVBO? What the hell kind of a name is that? Zabos, sorry, I get people signing in from all over the world, some from, yeah. But some of the names I'm going to pronounce incorrectly, and I'm going to apologize for that. But he asked, do you still get dividends while selling covered calls? As long as you own the stock, you are entitled to the dividends. So that is a yes. Let's keep on going with more questions. I got a whole bunch of stocks I want to go, oh, wow, no question. Oh, there's one right there. Can you explain how the call plays into your strategy? Absolutely. Use your 38, 10, 68, whatever. I don't know what your parents were thinking when they named you, dude, but, why don't you just call you Steve? Steve from Detroit. There we go. If anyone is sitting on the fence, your membership is totally worth it. Thanks, Paul. I appreciate that. Okay, so 5 rules. Let's go through the 5 rules again because I forgot where I was. Number 1, never buy something you don't understand. If you don't understand it, if you can't explain it in 3 minutes, 30 seconds. If you can't explain why you bought it in 30 seconds, a quick elevator pitch, don't buy it. If you don't know what they do, I have no idea what this company does. Why would I buy it if I don't know what they do? I'm trying to hear Paul. I really am. Anyway, never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. As I was saying, with the company and the profits, you got 9,664 companies all looking for your dollars. Because you invest in their companies, they get to grow, they get to do this, they get to do that, they get to do all that kind of weird stuff. But here's the thing. I want to make sure my money goes to a company that is consistently profitable. So how do I figure that out? Well, like I said, 9,600 companies, there's 2 different types. It's going to take one company, is going to take all the money, put it back into the company for capital growth. Really don't care. I'm not looking for capital growth. I'm looking for cash flow. Occidental Petroleum, I love Occidental Petroleum, OXY. Okay, second company, they're going to take all their profits and they are going to share with us, the investors, by what is called a dividend. A dividend is nothing more, nothing less than a portion of the company's profits that goes back to the investors. Okay, the very first dividend stock was sold in 1602. These brilliant Dutch business guys got together and said, we want to create this big, huge company, but we need all this money. Where are we going to get it from? Well, here's an idea. How about we go door to door? I have a great investment for you. You give us money and we'll give you a share of the profits. The VOC, the Dutch East India Shipping Company, was the biggest company there was, and it was the very first dividend stock company. They promised to all their investors, after they knocked door to door selling to the average person, that's me and you. Now, before this time, the average person wasn't allowed to, or didn't have the ability to invest in companies. So they went door to door, sold all these shares, and they promised a percentage of the profits. And they played good on the profits. 198 years, they averaged 18% per year. For 198 years before they went belly up because of, who knows? Does anybody know? Who knows why they went belly up? You can figure it out. It's really not that difficult. Greed and mismanagement. You get a good company running good, and you get some people in there saying, hey, I want a raise. I think I'll give myself a raise. Yep, greed and mismanagement made it go belly up. Anyway, they started something. Buy a good company, you get a share of their profits. So if the profits consistently increase every single year, logic, reason, and common sense tells me that they are consistently profitable. Okay, you cannot increase the payments to the shareholders if you're not consistently profitable. So I go directly to the dividend increases. So you get a pencil, piece of paper. This is some valuable information for those who don't know it yet. Number one, go to Google and search Dividend Kings List 2024. 54 companies that have increased their dividends for more than 5 decades. Dividend Aristocrats List 2024. 67 companies that have increased their dividends for more than 25 years. Dividend Champions, 150 companies that have increased their dividends to their shareholders for 25 or more years. Similar to the Aristocrats, but a few little differences in the rules. Aristocrats are a little bit more picky. Anyway, fourth list, the Dividend Contenders List 2024. 300 companies that have consistently increased their dividends from 10 years to 24 years. And then to top it all off, list number 5. I like the number 5. You're going to see a lot of 5s around here. And those of you into theology, you'll know what 5 means. Anyway, fifth list, Warren Buffett's list 2025. Now, if you know of a trader with the accolades such as good as Warren Buffett, maybe you can use his list, if you like. Okay, that being said, once I figure out all these lists, okay, there's only about 300 companies, I take them and I put them into my calendar. Because somebody asked a little while ago about a certain type of stock, okay? Now, oil stocks, gas stocks, energy stocks, dry goods, paper goods, raw materials, stuff like that. I honestly don't care. Seriously, I don't. Because I don't compartmentalize my stocks. I take them all and I put them all into a calendar. Now, the calendar tells me when to look at it. I just invested a bunch into money into, yeah, whatever. Yeah, it should pay off in 20 years. Good for you. I don't have 20 years. I mean, yeah, I do get 20 years, but I'm not putting any money aside and waiting 20 years. Yeah, no. I want cash flow every single week. So let me tell you, let me finish up here. Oh, what the heck is here? Why is that not charging? I got one camera that's not charging. No, it's not charging. Damn. All right. It's not doing very much of anything anyway. All right. Give me a second. I got to get this camera right. I got 6 cameras going, and this one right here is not charging properly. All right. I'll be back in a second. Don't go anywhere. Where are you? Huh. It's not charging. Damn. All right, let's go from here, get rid of that one, and use this one. Give me a second. Technical difficulties. There, now it's charging. All right. Oh, after I get my 300 companies, I put them into the calendar. The calendar tells me when to take a look at it. The reason being, here you go, you ready? There are 266 trading days in the year. Darbenley, what are you doing over there, dude? You're all over the place. You were on TikTok, then you were on YouTube, now you're over on Instagram. You get around, dude. All right, where was I? 266 trading days in the year. 12 months, 4 quarters. Quarter 1, January, February, March. Quarter 2, April, May, June. Quarter 3, July, August, September. Quarter 4, October, November, December. Today is the last trading day of the 3rd quarter. Tomorrow starts the 4th quarter. The very first day of the 4th quarter starts tomorrow. Now, each quarter has 13 weeks. We have 13 weeks until the end of the year. Week number 1 starts tomorrow. Okay? Now, that being said, here's the funny thing about week number 1 of the 4th quarter. Well, week number 1 of the 4th quarter looks the exact same as week number 1 of the 3rd quarter, which coincidentally looks the exact same as week number 1 of the 1st quarter. Isn't that weird? The same stocks over and over and over again. Okay, so if the same stocks over and over and over again, as soon as they pop up on the calendar, I take a look at them. Why? Because in all my years of trading, I have found that if I want to buy a stock, I want to buy it 10 days or 2 weeks before the EX date. Each one of these dates, each one of these little green dots represents an EX date. Let me explain what that is. EX date is one of the 4 dates you need to remember when trading dividend stocks. The very first day is the announcement date. That is when the company comes out and say, hey, this is ABC company, this dividend we're paying it on this date. That's the announcement date. Date number 2 is called the EX dividend date. That's the last day the stock trades before the dividend is paid out. If you want to get the dividend, you need to buy the stock before the green little dot, which is the EX date. Date number 3 is the date of record. The date of record basically means whoever owns the stock on the date of record is entitled to the dividend. Plain and simple. There is no, oops, I was late, can I still get it? No, it doesn't work that way. All right? The 4th date, date number 4, is the payment date. That's when you're going to get your check. Simple, 4 dates. Announcement date, EX date, date of record, and payment date. Simple, don't confuse it. Now, stocks have a tendency to go up in value just before the EX date. See these little green dots? Just before the EX date, they have a tendency to go up. So when I see that Wells Fargo has its dividend on the 2nd of September, the 2nd of November, well, I want to buy it 2 weeks before that date on a Monday, because I do all my buying on Monday. Why? Well, because I'm an option seller. Now, this is where I incorporate the stock options. Number 1, I'm only buying good quality stocks. Okay, once I buy the good quality stock 2 weeks before the dividend date, because that's when the stocks move up. Okay, if you know a stock's going to move, great. Now, what do you do with that information? Do you buy the stock? Do you buy the option? Do you buy the stock, sell an option against it? What do you do? Well, I do a simple, safe, strategic strategy called the covered call. That's where you buy the stock, sell the option against it. We're going to get that in a few minutes. We're actually going to do some live trades. Not live because the market's closed, but I'm actually going to do some trades as we're here. And I'm going to explain them as I go along. And what you need to do is pay attention and see if, number 1, does it make sense? That's number 1. Number 2, do you think you can copy it and duplicate it? Well, the beauty of this is that this screen right here is live on YouTube, which means this video tonight, everything I say, happy, happy, joy, joy, is going to be recorded for prosperity. So 15, 20 years. I can go back and I look at myself acting like an idiot. As a matter of fact, just for the fun of it, let's do this really quick. See if I can do it as quick as possible here. And I'll show you exactly what I mean. And you'll say, ha, that's funny, because it kind of is funny. But it also is going to serve two purposes. One, the 10-minute trade. This is my YouTube channel. Okay, this one's live. This one's live. So I have two live YouTube channels at this moment in time. Now we're going to go to the videos. We're going to go to the oldest videos. Now, the funny thing is, I found my oldest video today. It was in 2011. Okay, look at this right here. Remember I told you about my daughter?
Hi, I'm JC, and as you being part of my...
See, it looks just like me.
Thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of...
That's me. Now this video, I have more hair back then. I was better looking back then than I am now, but it is what it is. This video was in 2012. Yep. Watch. It gets funny. Hold on a second.
What does that mean? That means every single day you can buy a different stock. Every single day there is a different company paying out dividends.
I laugh every time I see that, because that was a moment in time I was trying to entertain. At the moment, she was 11. Now, I first started showing her how to trade when she was 9. This video was done when she was 11 in 2000. I don't know what the hell was this. Hold on a second. And it was 12 years ago. Yeah. See? 12 years ago, right there. Okay, so 12 years ago, yeah. I've actually been doing this crap for 12 years. Actually, longer than that, but that's besides the point. Anyway. See that? I forget where I was. Oh, yeah. So this is being recorded, so if it makes sense, if you have a little bit of difficulties, you can always go back and you can re-watch the videos over and over and over again. Now, I'm not only making this for you, I'm also making it for my children, my grandchildren, my great-grandchildren, because I like to think, as delusional as I may be, that eventually my children and my grandchildren will have an interest in their own money, because when I'm gone, you know, what are they going to do? They can't keep going to dad when dad's not around. Okay, I see you got this. Where are we watching on the screen? Okay. All right. So, let's start looking at some stocks. Best day of the week to make trades, Monday. Hey, Jel, how are you doing? Now, the reason why I say Monday, for me, now there's so many different trading strategies, you got to pick one. Pick 2. Pick 7. Pick 10. Doesn't really matter, but you got to start somewhere. Now, I consider this as a stepping stone strategy because it's simple, it's safe, it's predictable, it's consistent, no way to lose, blah, 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 all that kind of nice, neat, fun stuff. Now, I'm doing 1% a week strategy. All right, Joe, good to hear that. Way to go. What was I saying? See, I told you, once the questions pop up, I lose track of what I'm doing. Okay, I do. All right, we're going to do a few trades. We're going to look at some stocks. I'm going to answer a bunch of questions. We're going to go through a couple examples so that you can see if it works for you. It's not for everyone. If you're looking to make a lot of money, this ain't the place. This is slow. This is monotonous. This is snail's pace. Best day of the week. Yeah, if you're looking to buy something and have it go through the roof, this ain't the right place. This is strictly cash flow only. Okay, I'm not looking for capital growth. Granted, my account does grow very little bit every week because, like I said earlier, I'm retired, I have a certain amount of money, and I put that into dividend stocks, and I get a safe, predictable, consistent 1% per week. That does come to over 50% per year for those of you difficult with adding and subtracting. Now, before we go any further, first and foremost, I have no degrees. I have not been to college. I took the path less traveled. Pretty sure. Sorry, I derailed my own question. You are giving some good ideas for Monday Think. All right, thank you. As I was saying, it may not look it. You may not believe it, but here's a couple of facts that you may not know about me. Okay, believe it or not, I was once a CEO. Really? Believe it or not, I was. I had 26 employees. I made artificial coral reefs for museums, aquariums, very rich people, resorts, stuff like that. Big ones. Okay, made a lot of money. I had to figure out what to do with the money. This is what I came up with. Okay. Let's continue. Oh, first and foremost, I don't have a college degree. Do not listen to a damn word I say. Okay. Never blindly follow anyone online. Do your research. This is why I tell people, if you really want to talk to me, and I have no problem. I love talking to people. I really do. DM me your phone number. I will give you a call. Okay. And I talked to 2 people today. You have a question, Joshua? Hit me with your best shot. Yeah, fire away. I love that song. What do you got, Joshua? Come on, come on, come on. We're waiting. So when I say, if you really want to talk to me, DM me your phone number. I will give you a call. We'll chat. This is not for everyone. Like I said, it's slow, it's boring, it's monotonous, it's repetitive. It's the same thing week after week after week after week. But what's better than that? Okay, I'm from the age where the 60s, 70s, and 80s are where I grew up. 8 o'clock in the morning, I would go to work. 8 o'clock Monday morning, I'd go to work. 4 o'clock Friday. Joshua, what are you going to do for, oh, really? I have no idea. Okay, I'm going to my son's house for Halloween. I have no idea what I'm going to do. Maybe I'll be Jack Skeleton. Who knows? Shit. So you guys keep asking me questions. I lose train of thought. What was I saying? Shit. Don't get old. It's no fun. Anyway, let's keep on going. Can you explain how the calls play into your strategy? We're going to get to that in a little bit. We're going to go up through some of these questions. Mostly people just joining. Uh-oh. Oh, I missed all these. Okay, what do we got? What do we got? What do we got? Harrison, got it. You're a bot. Can't even lay out your qualifications. Sure I can. Here's my qualifications. I got none. I got my qualifications through the school of hard knocks. That means you do something wrong, you lose a shitload of money. You learn your lesson. Okay? Guess what? You do something else, you learn the lesson. You do something else, you learn a lesson. Okay? There is no training. Okay? There is no training for what I do. I have not met a single person who does what I do. It's simple. And wait a minute, Darbenly, YouTube is not working well? What do you mean? YouTube is not working well, he said. Fuck. Comic books are a hot market. Yeah, they are. Okay? Let's keep on going. It's not funny, Harrison. Okay, Harrison, I got it. You're a bot. No, I'm not. Can't even lay out your qualifications. Yes, I can. Twine. Yeah, okay. Okay, Harrison, here's my qualifications. Okay? I'm going to show you exactly my trades for this year. Here they are. I show you every single one of my trades this year. I have 6 accounts. I share 3 of them with you guys. Okay, if you cannot read, if you cannot understand, I cannot help you. Okay, here's week 1, first quarter of this year. Now, you could go back, and last year I did the exact same thing. Year before, I did the exact same thing. Hold on, and I'm going to show you from 2000. Wait a second, I'm going to show you right now, damn it. Okay, here. Let's go back to here. Okay, let's go back to oldest. Let's go right here.
This week, CMCSK, CMCSA.
Now, Harrison, you see this? The date, March 23rd, 2013. You can go through all my old videos. They go all the way back to 2012. Look at this, 1-year chart, 90-day chart, 30-day chart. Okay, it tells you exactly what I'm doing 2013. I got them from 2012, 2014, 2015, all the way back. The only reason you're seeing me here now because someone was stupid enough to put me in front of a camera and say, hey, James, go ahead, have fun. Well, I'm having fun. I'm retired. I retired last November, so this is what I'm going to do with my retirement. I'm going to show people, teach people how to invest for a safe, predictable, consistent 1% per week. You don't like it, you don't need to be here. If you don't have something nice to say, don't say anything at all. Harrison, you're spewing common sense. Yeah, no shit, it's common sense. However, Harrison, if it's common sense, how much do you make on your investments every year? I actually show you exactly what I make on my investments. Where are they? Where are they? Where are they? Where are they? Right here. Okay. January 1st, January 2nd, January 2nd, January 2nd, January 2nd, January 2nd, CVS, General Motors, LUV, Southwest Airlines, Comcast, and Ford. Okay, these are the 5 positions I bought in this one particular account. Well, what did I get for a rate of return? 2.99% for 1 week. That's week number 1. Week number 2, Lowe's, Comcast, Ford, General Motors. All the trades, all day time stamped, the opens, the fills, all that crap. Week number 2, 2.43%. Week number 3, General Motors, Comcast, Wells Fargo, Morgan Stanley, Ford. Week number 3, 1.35%, 2.78, 1.62, 3.68, 2.57, 2.02, 3.73. I show you all my damn trades. No, I didn't go to school. No, I don't have a graduate degree. I don't know shit. But I do know, however, that 2.92% for 1 week is over 100% per year, if I could do it every year. No, I don't tell people I do 2 or 3% a week. No, I tell them I do 1% because that's what I average. Consistent, thank you, Twine. But if you want to take a look, they're all here. Okay, you go all the way up to the top, and that will show you this week's, which I haven't filled in all the numbers yet because, I just haven't gotten around to it. Week number 39, which was last week. Last week, Riley, MU, Halliburton, Kohl's, CVS, Riley, Walgreens, Halliburton. That was last week. I don't have the numbers figured out yet because I haven't got around to doing it because it's time consuming and I'm retired and I don't feel like doing that. I'm going to give you a grandson, don't you worry. Yeah, Harrison, that's not funny. If you buy stocks 2 weeks before the EX date, what date do you pick for all call options, expiration date? Excellent question. So let me finish up. Account number 1, at this moment in time, 46%. Now we're in week number 39. No, wait a minute. Today starts week number 40. Week number 40 for the year, week number 1 for the 4th quarter. Okay, account number 1 started out with 117, now it's up to 142. I've taken out over 30,000 and it's already over 46%. Account number 2 started out with 100,000 cash and 100,000 margin. I do suggest people do not do margin accounts until you understand everything. Okay, margin accounts, yeah, they're profitable, but it's borrowed money. You're paying to use that money, and if you're wrong, it hurts. Okay, account number 3, this is only 3 months old, and it's already up over 10%. So, I actually share with you the numbers. So, Harrison, that is my, what do you call it? My, whatever, you know what's called. My calling card, so to speak. Hey, we're at 55. If we drop below 55, I'm going to reboot. Okay, neither don't listen to this bot. Go to school and go read and learn for yourself. That's exactly what I tell people. Don't listen to a damn word I say. What I'm going to tell you, hey, it's one thing. If you want to listen to it, that's up to you. Now, if it makes sense, great. If it don't make sense, I have a college degree. They don't teach this. I can almost guarantee they don't teach this. They don't want you to know how to invest money for yourself, especially getting over 50% per year. Okay, I showed you all my trades. Harrison, let's see yours. And no, I'm not a bot. You can go like this for all I care. I honestly don't care about your feelings. What's your major? Harrison, somebody get rid of him, please. Why? That's why you didn't learn about it. I'm in accounting and I've learned about this stuff. My junior investment class. Okay, great. Well, then I'm assuming you're getting 50% or more every single year on your investment. I highly doubt it. I have never met a single person who gets over 50% for more than 15 consecutive years. Hey, all, it's Mima. Mima, how are you doing? But this live video is pre-recorded. Hey, Harrison, this live video is pre-recorded. Did I record this? Take it and stick it where the sun don't shine, brother. Somebody get rid of him. Please, never mind, I'll do it myself. I'm tired of this shit. Let's delete this one. Block account, there we go. That way I don't have to listen to him anymore. Why can't I block his account? There we go, confirm. Thank you. Reply to Harrison. Piss off, brother, have a lovely day. There we go. Okay, where was I? All right, more questions. Andrea! I think Harrison needs to be ignored and the people that have been here for a while can continue. Thank you, Andrea. Now, I did block him so we won't be hearing from him. Florida girl, how have you been? I haven't heard from you in a while. So we're almost done with the questions. I can go right to the trades. Fab, sounds good, great. Andre, I agree. He should get blocked. I already blocked him, thank you. That's your proof. Yeah, it's pre-recorded. Now you're blocked, so you can't. Yeah, all right. Hey, Hollywood's here. Yo, what's happening, Hollywood? Darbenly, why would college teach you how to make money? They are printing debt and slavery. Darbenly, you and I, brother, we have to have a conversation. Man, you think just like I do. All right, look at that. All the questions are done and over with. Uh-oh. Mima, you were explaining which call dates you get in, get out of, and why. Okay, great. Thank you, Mima. Here we go. Now, how do you choose a call option? Ladybug, thank you. Now, I admit, now there's a bunch of you here know that I get distracted easily. We're at 52. We're going to reboot. Sorry. I can't do 52, especially on a what night is this? Let's reboot, everyone, so don't go away. I'm going to send you another link. I do that every once in a while. Come on. Fake name started following you. Okay. Live. Here we go. We're going to try this one more time. All right. Mirror. There we go. Mirror, mirror on the wall. Who's the fairest on the wall? Okay, so you guys on Yahoo, on YouTube, sorry about that. You guys on Instagram, sorry about that. You guys on Facebook and TikTok, sorry about that. We had a reboot. Had a couple of turds in the audience and had to take care of business. All right, so let's get looking at some stocks that we had pop up over the week. Starting out with 3M. 3M. Here we go, 3M. 3M's going to be a no for this week. Say hi, Joe. Okay, hi, all you guys. Sorry about that. I don't like turds. I really don't. Some people really irk me. Darberly, thank you for coming on back. Thank you for coming on back, everyone. Let's see if we can get the numbers up over 100, over 200. That'd be nice. All right. More likes can attract more viewers. Keep it up. Yep, there you go. Like, subscribe, comment, all that kind of nice, neat stuff. 3M is going to be a no only because it's at the high of the year. We don't like that. We're going to take a look at Lowe's. Lowe's is another dividend king, has been in business for over 100 years. Lowe's is at the high of the year. We're going to pass on that one also. Hey, Flipper, how you doing? James, really? You can't spell James right, Flipper? Come on. All right, so Lowe's is going to be good for 2 weeks from today. L-O-W, which is kind of funny because Home Depot, we're going to look at that one in 2 weeks also. All right, so that's Lowe's. ExxonMobil, here we go. ExxonMobil. Ooh, I like the chart. Check it out. High, the low, where was it? Where is it? What direction is it going? It's channeling sideways. Great. The 117.05, the 117 is going for 135. That's over 1%. That's what we're looking for. I know who ExxonMobil is. I know what they do. They do oil and gas. All right, great. Let's take a look at the chart. A year ago, they were at 116. It's kind of funny because a year ago they're at 116 and today they're at 117. So if you held it for a year, you made $1. Describe your covered call strategy. I have plenty of Meta. Should I sell? Okay, Evergas. I don't tell people what to do. I have no idea who you are. I have no idea what your risk factors are. I have no idea what your goals are. I cannot give you advice on what to do with your Meta. But I can tell you, Meta doesn't pay dividends. It's a big fat no. I have no idea who Ed Vargas. Ed Vargas. Okay, Ed. Ed, how you doing? Ed, if you want to DM me with your phone number, we can have a chat. I can give you a few ideas, a few pointers, but I can't tell you what to do. I could, but I'm not going to. All right. ExxonMobil, a year ago, 116, bottomed out in middle of January at 95. Meta does pay dividends. I love it when people question me. I do. It makes life interesting. META. Oh, silly me, they paid 3 dividends. Okay, this is not what okay, Ed, this is not what I consider paying dividends. 3. The dude is worth billions upon billions upon billions of dollars. Fahad, how are you doing? He's worth billions upon billions, and he gives out 50 cents a share? Yeah. 3 times he paid. When I say I like 20 years, that's 2 decades. Meta has what, 3 payments? And you think that's a good thing? No. I don't like Meta. They don't share their dividends. It doesn't give me a good warm feeling. Okay, if I can't see them consistently being profitable, which means increasing their dividends, the share of the profits to the investors. If I can't see that, well, how am I supposed to learn? Can I learn from this? Yes, you can. We're actually going to explain everything you need to know. Dave, first thing, you got to pick a good company. What's a good company? Well, any company that has consistently increased their dividends for more than 20 years. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. If you can come up with another, maybe Paul Tudor Jones, maybe you can take a look at his list. He's a good trader. Okay, somebody you know. Everybody knows who Warren Buffett is. Okay, that being said, any Bitcoin updates? No, Fahad, I don't do cryptocurrency. I've said that many times. All right, ExxonMobil. High of the year is 123. Look at the last 30 days. Where do we think this thing is going to go? Okay, so last 30 days, here we go. Now, I'm going to say no to ExxonMobil, and here's the reason why. 30 days ago, we were at 118. We bottomed out at 108. Then we jumped back up to 118 again. Now she pulled back, and now she's back up to almost 118. Well, she goes down, up, down, up. Where do you think she's going next? Well, as soon as she hits that top up here, she's going to come back down again. So I don't want to buy it. Kyle will take a look at MU. Do you prefer to have your call expiration date before or after the EX dividend date? That's an interesting question, Texan Bull. All right, hold on. I'm going to answer that 1 second. MU. Who wants to look at MU? Kyle? So let me finish up with ExxonMobil. Now, stocks go up. Stocks go down, stocks go up, down, up. Most likely, would you take a risk with oil? What if they ban fracking? All right, Slangley. Oh, all right. It's a nice idea that they're banning fracking, but you're missing the big picture, okay? Now, whatever little bubble you live in, and I'm not trying to insult you, but if you're talking this way, then I know you're living in a little bubble. Okay, here in the United States, we are a very, very, very small as compared to the entire world. There's no way possible you are going to stop India, Africa, China, and some of the European countries to get away from oil. Ain't going to happen. Okay, they honestly really don't care about your feelings. If we here in the United States ban fracking, well, great. Well, you have the rest of the world, Canada, South America, Europe, Asia, Africa. You think they're going to stop their oil? No, ain't going to happen. Just ain't going to happen. And I don't know how else to say it. If you really seriously think of it that way, well, then don't buy any oil. You cannot get away from it. Not yet. Lots of BRICS countries are leaving oil and going crypto. Yeah, okay, fine. But we're not going to see it in our lifetime. Okay, granted, you may be younger than me. I'm 60. I might, if I pace myself. Yeah, I get that too. But that's another conversation. Okay, you think that the oil is going to bankrupt the stock market? Ain't going to happen. Okay, if that's the way you think, well, number one, you shouldn't be here. Okay, number two, it ain't going to happen. The stock market's been around for over 400 years. Stock market has been here before oil was here. If oil disappears, well, guess what? The stock market will still be here. And they still need something to lubricate the machineries in order to make your Pepsi, in order to make your Coca-Cola, in order to make your coffee, in order to make the clothes that you wear. Don't give me the crap. It's not there yet. You get generations and generations to go if you think we're going to get away from oil. Ain't going to happen. Let me finish with what I'm saying. ExxonMobil, down, up, down, up. Next it's coming down. I don't like it. I'm going to put ExxonMobil for 2 weeks. We'll take a look at it in another 2 weeks. XOM. All right, ExxonMobil. Bristol Myers Squibb is next. But before we do that, Texan Bull, do I like to do my call expiration date before or after EX dividend date? All right, now Texan Bull, when I said before, let's just take a look at Wells Fargo. WFC, Wells Fargo, right there. Okay, here's the dividend for Wells Fargo. Now, if I'm concerned about the dividend, I'm going to buy it before the EX date. This little green dot here, November 2nd, that is when Wells Fargo is going to pay their dividend. If I want to collect that dividend, I have to buy it before the 1st, the 31st, the 26th, the 20th, the 3rd, the 5th, the 11th, the 12th, any day before this date, if I want to collect the dividend. Okay? Now, when I buy a stock, Wells Fargo has a tendency to go up in value just before the EX date. The EX date, that's this date right here. I like to buy 2 weeks before, okay, 1 week, 2 weeks, on a Monday. Now, that's when I like to buy, that's when I like to look. That is the signal. If it's right here, okay, great. Well, I want to buy it on a Monday. If I do, all right, I'll buy it at the market opening, first thing Monday morning. I will sell the closest covered call there is to it. We're going to get into some numbers. We're going to get into some examples in a little bit, so just hang tight. But if I'm buying it on the 16th at the market open, let's say it's $100. I buy it at the market open at $100. I'm going to sell it to someone else for the exact same price. Why am I doing that? Well, I'm doing that not to collect the increase in the stock. I'm not doing it to collect the dividend. I'm doing it to collect the premium. Now let's take a look real quick. The dividend on Wells Fargo is 35 cents a share. Hold tight. Wells Fargo, WFC. Okay, well, here's Wells Fargo. Perfect opportunity. High, low, where was it, where is it, what direction is it going? Right now it's at 56.49. If I wanted to buy it at this price right here, 56.47, the closest strike price is going to be the 57. That's 52 to 53. Not quite there. The 56 is going 102 to 106, right around 1%. Okay, now why would I want to collect 35 cents a share when I can collect either 52 or 102? This one right here makes more sense, the 56. It's 102, we lose 47 cents, reduce that. I'm over 1% on the 56s. What if the company invests in woke? I'm going to get that question in a little bit. So let's go back to here. So if I'm buying it on a Monday at the market open and I'm collecting the premium, not the dividend, the premium, and the premium's over 1% because that's what I'm looking for. Now, if I buy it at 100, come Friday, it's either going to be above 100 or below 100. If it's above 100, well, then somebody's going to buy it from me, and I'll be back into cash on Monday. Okay? And then I should pick another stock. If it is below 100 on Friday, I keep all the money, and then I take it and I sell another call against it, and I collect another 1%. Now, on the second Friday, this is the first, this is the second. If I still have it on the second, if it's above 100, I'll be back into cash. Okay, and I find something else. If it's not, I will do it again for a third time. Okay, collect another premium and the dividend. So premium, 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 dividend. And if it's above 100, I'll be back into cash. If it's below 100, I'll do it again. And I'll do it again. And I'll do it again. And if I get 1% or even 0.5% or even 0.75%, if I'm going to give you my cow analogy. If I buy a cow, it gives me a gallon a week. Great. Well, what if it gives me a half a gallon? Do I get rid of it? No. I keep holding it until it gives me what I'm looking for. So if I buy it on a Monday, $100, and I will keep selling a covered call until I sell it for more than 100. Okay? Do I want to collect the dividend? No. I want to get my 1%, get the hell out, and find something else. Because Wells Fargo pays a dividend every 90 days. So you're using the upcoming dividend for leverage for the premium. Not really leverage, but kind of like an indicator. When are they paying their dividend? And are they consistently increasing their dividends? Okay, so Kyle wants to take a look at MU. Micron Technology. MU. MU is going to be a no for this week, but we will take a look at MU in a couple of weeks. And here's the reason why. Okay? High, a low. Where was it? Where is it? What direction is it going? She went up, she went down, now she's going up again. So I want to zoom into there and take a look. But before I do that, okay, quick look at the chart. High, low, where was it? Where is it? What direction? Great. Now, is it giving me the 1% I'm looking for? Well, if the purchase price is 103, the closest strike price to 103 is going to be 103. Okay, 103.19, 103, 254. I don't know about you guys, but that's close to 2%. But here's the question. Do I like MU? Kyle, do I like MU? Do I want to own it? What if it goes down? Do I want to own it even if it goes down? If you can't answer that question, then don't buy it. Okay, don't ever buy something you don't understand or you do not want to hold on to. Because you're going to buy something and it is going to drop. Okay? You're going to buy something, it's going to go up. You're going to buy something and it's going to go nowhere. Stocks only go three ways: up, down, or nowhere. Basically sideways. And I hate saying sideways because they don't go sideways. They go up and they go down. That's it. Up and down, that's all stocks do. So here's the thing. The reason why I don't want to do Micron this week, well, the bottom for the year is 64. The top of the year is 156. That's like a 100% increase. Can you imagine that? Goes from 64 to 158. That's a 100% increase. But what happened next? It goes from 160 down to 90, almost 85, almost cuts in half. All right, well, she went down, she went up. Let's take a look at the last 30 days. This is why I don't want to buy it. Okay, right there. This is the last 30 days. You see that? 30 days ago, we're at 95. We bottomed out at 85. Well, she gapped up last Thursday. Friday was a down day. Today was a down day. What do you think tomorrow is going to be? Well, look at this big gap here between the 95 and the 112. Big gap. Well, that's going to fill, and it's going to fill slowly, and this thing's going to come down. So I like Micron, but I'm going to look at it in another 2 weeks. Holy shit, another 92. I'm going to look at Micron in another 2 weeks because it might look better. Now, I do write stuff down, and I've been doing this since January, so there's a lot of stuff in this book. I don't know if you can see it, but see them all? All these things you guys have me take a look at, page after page after page after page. Okay, these are all stocks you guys have me take a look at. So when I say I'm going to look at it in 2 weeks because it looks good, okay, she goes up, now she's going to come down. Now when she's down here, okay, back down here in about 2 weeks, she's going to turn around and go back up again. That's when I want to buy it. I follow stocks very closely. I look at them twice a day. Once in the morning when I do my trade, and I do have a live trading class in case anybody wants to join me live. Now, let's keep on going with these questions. I got 94 more to go. Holy cow. Okay, here we go. What do you reckon the COT report is used for? Sentiment? COT? What the heck is a COT report? Wave, Segovia, how are you today? I have no idea where you're calling from, but okay, cool. I have no idea what COT is. Okay, zoom blank. Tell me what COT is. Totally clueless on that one. How do I get started with trading? Chill, no play. Dude, seriously, you're new here. I don't ever suggest anybody new starting out right away. Okay, sit back, relax. Does it make sense? Great. Follow along, send me a number, I'll give you a call. All that kind of nice, neat, fun stuff. Slangly, should I put my money in a company that hires migrants? I'm not going to get into politics. Seriously, don't. Don't get me started. Give me a strategy for trading in curves, not candles. Oh boy. Let's continue. What about a company that wants to fuel hydrogen cars? Dave, um, that is great. It's a wonderful idea. Seriously, it really is an awesome, awesome idea. It really is. However, think about it clearly. It's going to take years for you to see a decent profit. Okay? Balance, Twine, need to moderate. Yes, I do need a moderator on YouTube. It's a great idea. Hydrogen fuel cars, great, wonderful. We are decades away from that, brother. Seriously, we are. Okay? I have never, ever, ever driven down the road and seen a hydrogen station anywhere. I see gas stations and I see electric lines. Gas, electric. Those are the two we have at this moment in time. Now, this trading strategy is for cash flow, not capital appreciation. That company you're talking about right there, that is a capital appreciation stock. You put your money into it, it slowly grows. Did you put that background to attract viewers? What? It's just a stock. It's just a stock chart. It makes it easier. I'm not going to pay attention to you, dude. So anyway, companies that have been around for a long period of time. I'm 65. I'm sorry, I'm only 60. This is specifically for cash flow only. I like you already ain't going to happen. Dude, I have no idea what you mean. Nah. Hey, bro, Alex K8 Neves. Alex 8 Neves. I have no idea what that means. Hey, bro, how are you, dude? Balance. I told you to teach me a strategy to trade the curve. Okay, I don't like the curve. Okay? Candle type right here. Okay? I don't like it. Okay? It doesn't tell me anything other than it's going up, now it's going down. You like it, fine. You do it. I don't like it. I've been trading for 20 years. All right. I come from a group of people, a generation. If it ain't broke, don't fix it. Yeah, I don't like it. I'm not going to use it. You can't make me go away. Where were they? All right. All right, so let's keep on going. Dude, I like you already. Ain't going to happen. I have no idea what that means, but all right. Larissa, WSM. What the heck is WSM? WSM. WSM. William Sonoma. Cool. No. Sorry. It's a monthly. Now, I've been saying I don't like monthlies because monthlies don't work. Larissa, sorry. Monthlies don't work. I can do it once a month. That's 12 times a year. I've already admitted I haven't been to college, but I do know 52 is better than 12. Give me the strongest deal you entire into trading. Enter how much you benefit. Yeah, I already told you, dude, I make 1% a week, every week. That's 50% a year. If that's not good enough for you, then you shouldn't be here. Okay? Tyrese, Taiwan, okay, candlestick, okay, yeah, whatever. Yes, Sir Gizmo, you're right. Hydrogen is expensive. And they haven't even started. Does, Advanced Auto Parts work this week? Badfish, let's take a look at it. I like Advanced Auto Parts. I have traded them a couple of times this year. Let's see what they look like. A little down today. But first thing I always want to see, where's the high? Where's the low? Where was it? Where is it? What direction is it currently going? It's currently at 39.12. The closest one is going to be the 39. That's 87 cents. That's more than 2%. Well, that's great. I like more than 2%. Now let's take a look at the chart. Is it the right time? Now, just because the numbers work, it may not be the right time to buy. So let's take a look. The right time to buy. A year ago, AAP, Advanced Auto Parts, was at 55.72. The high of the year was the end of March, and that was 88.44. Well, look what happened right here. We had a big drop from 62 all the way down to 48. Well, that's a big drop. But then it kept on going. And then here's the bottom right here. So let's take a good look at that bottom. Here's the last 30 days. And I love a 30-day chart that looks like this. Safest strategy is to pull all your money in one company right away. Yeah, hell no. I'm not going to bother answering you anymore. 30 days ago was the 30-day high. Well, what comes after the 30-day high? You're right, a 30-day low. 30-day high, 30-day low. What happens at 30-day low? She goes back up again. Profit taken, back up. Now she's coming down. Sorry, AAP does not work this week. Okay, but if you really like it, Well, she's not going to go down much further. So if you want to buy it at 39.12, sell the 39, you're going to get 2% if you like it. That's the big question. Do I like it, and do I like it at this price? Am I willing to buy it, grab the 2%, once it drops, wait for the turnaround, and sell another covered call to get more money off of it? Okay, I would personally wait. I would wait for it to find the bottom, then turn around. So I'm actually going to put AAP for next week, because I'm thinking sometime this week it's going to find the bottom and turn around. But all my money's already been invested. Today's Monday. All my money's already been invested, so I don't have any more money to invest. So I'm putting AAP for next week. And it's already written down for next week. That's probably why. Okay, Tony C. What oil stocks gives dividends? What oil stocks? Occidental Petroleum, ExxonMobil, Chevron, Hess, British Petroleum. They all give dividends. The only one losing money is Trump stock, and it's dumping fast. A buddy of mine lost money. You, Tony C., you only lose money when you sell for less than what you paid for. Okay, number one. Remember rule number one? Never buy something you do not want to hold on to long term. Why you bought DJT, whatever it is, DJT. Why he bought DJT is beyond me. It doesn't have profits yet, and it definitely doesn't have 20 years worth of dividends. That's plain and simple. Everybody knows that. It hasn't been around long enough. You guys can invest your money anywhere you want. I say no because it doesn't have historical performance. I'm 60. I don't have the luxury of putting money aside waiting for it to grow. I'm not looking for capital appreciation. I'm looking for cash flow, and that's it. Okay, let's keep on going. Keep on going. What do we get next? Dividend and what? Who does your hair? Really? Tim, thank you. Oracle. Ooh, just make memories. Oracle. I like Oracle. Oracle is on my list. ORCL. Unfortunately, it's going to be a no. The reason why it's going to be a no, look where it is right now. Now, one thing is I don't buy at the high. I buy when it's low. Look at the lows, okay? Up, down, low here. Up, down, low here. Low here, 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 low here. Why do I want to buy it at the high? I will keep an eye on it, and as it comes back down again, because that's all stocks do. I mean, take a look. Okay, look at that. Up, down, up, down, up, down, up, down. If you think, if you're under the impression that a stock is going to come to your house, make your bed, fold your laundry, and wash your dishes, you're sadly mistaken. They go up, they go down. That's all they do. Up, down, up, down. The idea, if you like a good stock, if you like this company, if it's here at 137 and she goes up to 145, take your damn profits. And when she comes back down again, buy it again. When she goes up, take your damn profits. It's not a profit until you take it, and nobody else went broke taking profit. Gush, I have no idea what Gush is. Gush. Hell no. It's a monthly. Don't you listen? Monthlies just don't work for me. If they work for you, great. More power to you. DRIP, that's a dividend reinvestment plan. Yep. Right, thank you, Twine. Pal, do you label your notebook by weeks or by days to track what you're going to look at? No, I'm really not that interested in that kind of stuff. My main focus is consistency, profitability, and safety. So if I'm only looking at companies that have been consistently profitable for decades, when I say decades, meaning they consistently increase their dividends every single year, year after year after year, okay? American Express, Bristol Myers Squibb, General Dynamics, JP Morgan, MasterCard, General Mills, AT&T, Verizon, Abbott Labs, AbbVie, Hormel, Caterpillar, Procter & Gamble, Bank Mellon, Wells Fargo, Citigroup, U.S. Steel, Lennar, Cisco, Comcast. I can go hundreds and hundreds of companies that have consistently increased their dividends every single year. Why the hell would I look at something that's not profitable? Okay? So in my book, no, I don't label anything. It's kind of like, all right, see, here's the list of what you guys asked me to take a look at. Over here are the companies that actually look good. So I write them down. And the ones that are circled are the ones that I'm actually going to trade. So do I write it down what date it is? No, I don't. But see, here's last week, same thing. List stocks, ones over here, the ones that are circled. Oops. Same thing. 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 Yeah. I write them down. If I like them, great. So this is this week's. Here's next week's. Okay? Here's 2 weeks from today. Here's 3 weeks from today. I know I have something written down for 3 weeks. I have nothing written down for 3 weeks from today. Okay. 3. Never mind. I just realized WSM is a monthly. Okay, talk to me about option trading. Alex, we can get there in a second. Hold on. Landon, you look at the fundamentals of the company through Yahoo Finance. Not necessarily so. Landon, what? First and foremost, Landon, number one, pick a company that is consistently increasing their dividends. That's bypassing all the BS. If they increase consistently every single year, that logic, reason, and common sense tells me that they're consistently profitable. Because how can they give me more and more money every single year if they're not consistently profitable? Common sense. Okay, dividend kings, aristocrats, champions, contenders, Warren Buffett's list, blah, blah, blah. That's number one, consistently profitable. Number two, weekly options. That takes care of 98% of all the other companies available. So I'm only looking at about 2% of all the companies, which is about 300 stocks. That's it. Now, I will then go into Yahoo Finance and take a look at what is the book value. That's very important to me. Okay, so let's take a look at one that we all know, NVIDIA. Lots of people love NVIDIA. Great. Take a look at the numbers. They pay a 1 penny dividend. They don't increase their dividends. Okay, and the book value $2. Okay, now a couple of weeks ago, NVIDIA was $1,200 a share. $1,200 a share. When it was $1,200 a share, they were paying a 4-cent dividend. Does that make sense to pay $1,200 a share to get a 4-cent dividend? Not to me. The book value when the stock was $1,200 was $2 a share. So let's say, hypothetically speaking, they do something wrong and the Supreme Court says, liquidate, pay all your investors back. Okay? Whatever you paid for that stock, you're getting the book value. That is it. You take a look at the balance sheet. The balance sheet of the company, how much they have coming in, how much they have going out, what are they worth? $2 a share. Hell no. I like companies that have a close stock price to their book value. Absolute worst case scenario, I want to make sure I'm good. What's your percentage risk of the premium? I'm not 100% sure what you mean by that. Never mind, just realized that, okay. You look at the fundamentals, yep. Let's keep on going. Mammy, I have no idea what Mammy is. Let's go back to here. Now, I said I want to do a couple of trades. I want you guys to come up with something good for me to take a look at. All sounds good. Albemarle, there we go. Real Estate Flipper wants to take a look at Albemarle, ALB. Now, I do own some Albemarle, just to let you know. Okay, Albemarle, first thing. High, a low, where was it? Where is it? What direction is it going? See this? It dropped down. Now she's going back up. She's currently at 94.71. I can buy it at 96. The 96 is going for 179. That is way over 1%, just a little bit below 2%. Okay? So the number works great. Now let's look at the chart. Is it a good time to buy it? Well, let's find out. A year ago, we're at 165. A couple of weeks later, here's our high, 177.52. Here's our bottom way down here. On the 14th, the bottom was 71.97. She goes up, down, up, yeah, no. Sorry, don't get me wrong, it's a good company. I do own it, but I bought it a couple of weeks ago. So it's on the chopping block for me this week. But it's not a good time to buy it because I don't like buying at a high. I like buying at a low or even lower or even lower. See, when the stock comes down, I like 2 days the upside, then I jump in. It goes up, pulls back, 2 days the upside, then I jump in. That's me. All right, Abel. Sorry about that, Flipper. ALB is going to be a no. What about monthly dividend yield play? Joe Van, you really got to give me a stock to take a look at because I don't know what you mean by monthly dividend yield pay. You buy a call and sell a call in that same week. Yeah, that's a spread. Nah, no thank you. Now, here's a funny thing about Yves Auguste. Okay, Yves Auguste. When you buy a call or a put, they 80% of the time expire worthless. Okay? Why would I want to buy a option if 80% of the times they expire worthless? I want to be a seller of the option and have it expire worthless because then I'm selling it and then I get to buy it back for nothing. But if your call is assigned before the payout, you missed the dividend. Ask Jeeves. You definitely missed the whole point, Jeeves. I'm not looking for the dividend. I use the dividend to tell me when to buy the stock, and then I collect the premium. The premium is usually always higher than the dividend. So why would I collect the dividend when I can collect the premium, and the premium is a lot higher? The stock we're looking at right now, ALB. So, ALB. Oh, it doesn't have its dividend this year. I mean, this week, this month. Last month, there it is right there. Now, where is he? Ask Jeeves. ALB. The dividend is 40 cents. Wait a second, that's the wrong year. Let's go to there. Okay. September 24th, ALB. 40 cents. Why would I buy the stocks to catch 40 cents? So I need to buy enough stocks to sell at least one contract. Exactly. Or you could do dividend capturing, which is a different strategy, but kind of using the same information. So, bro, you are so smart. Be safe. Stay with a pup. Okay. All right. Did I miss something? I did. I missed all these questions. Holy cow. Oh, I have to go backwards. Uh-oh. I missed a lot of questions. Holy cow. TJ. Oh. All right, here we are, right here. All right. Okay, so ask Jeeves, I'm not looking for the dividend. I'm looking for the premium. There's a difference between the two. KBW. What the heck is KBW? Now, just a little hint. KBW. If I ever say, what the heck is that? It's usually going to be a no. No options. No. Sorry, dude. TJ Stores. No. Never heard of them. Right? TJ. Yeah. What the hell are you thinking, dude? Seriously, really? No. All right. E buys 100 shares. Yep. Gator. Blah, blah, blah. Texas Bull. If your stock is not called because the stock dropped in value, do you roll down or stay the same price? It's always a numbers game. Texan Bull, always a number game. On Friday at 3 o'clock, we take a look at the numbers. We take a look at where the stock is. What option did we sell? Where is it currently now? How is that affected into the next following week? What we don't want to do, why don't you sell a put, enter the market? Antonio, that's called the wheel strategy. You missed a huge part of the conversation as to why I don't do that. Now, Texan Bull. Do you roll? I always like rolling. I take a look at 2 or 3 different scenarios. 1, do I let it expire worthless? 2, do I let it get called away from me? Or 3, do I roll it into another week to catch another premium? 3 different options I take a look at on Friday afternoon. To quote the great John F. Kennedy, we cannot answer the questions of tomorrow with the information we possess today. What does that mean? I can't tell you what I'm going to do Friday at 3 o'clock before the market closes on a Monday night because I have no idea what's going to happen Tuesday, Wednesday, or Thursday. Okay, so we have a live trading group every morning, Monday, Tuesday, Wednesday. Adam, we're going to show you a roll in a minute, so hold tight, don't go anywhere. So my morning trading group, we do all our buying on Mondays because that's the most time value. Because I sell time, okay? I sell options. And 80% of all options expire. So that is in my favor. I buy a good quality stock that is in an uptrend. See the uptrend? Okay, I buy a stock that's in an uptrend. Okay, I sell as close to the stock price as I possibly can. This way I get the highest rate of return. Sign up for the course and watch in real time. It's worth it. Thanks, Paul. On Friday at 3 o'clock, so Monday, Tuesday, Wednesday, Thursday, we're on at 9 a.m. and we look at all our positions. I answer all questions. I stay on the line with my subscribers until they are done asking questions. It's definitely worth $100 a month. That's it, $100 a month. You can ask me anything. I'll walk you through the whole thing. I don't hold any punches. I tell you everything. So yeah, on Friday at 3 o'clock, we take a choice. It's like 3 or 4 different choices. Do I let it expire? Do I let it be exercised? Do I roll it into the next week? Or do I just lose the money? Is it on YouTube or on your site? It's on my website. Okay? And that is the 10-Minute Trader. I probably should put something on YouTube to make it easy to get there. $100 a month for the morning classes? Yep. If you think about it, it's 22 days. There's 22 trading days in a month. And I'm on for about 2 hours every single day. That's 44 hours of watching as I make my trades. You can copy the same ones. You can ask me questions. However, I do not tell anybody what to buy. I show you exactly right here. All right, AT&T, well, this is that, that's that, this is this. If it makes sense, great, do it. If it doesn't make sense, don't do it. It's actually that simple. So let's go look at more questions. You buy a call. No, I do not buy calls. I do not buy calls. I do not buy any options. I sell options only. 80% of all options expire worthless. Why would I buy something with an 80% chance of it failing? No, thank you. I sell them. Then I have an 80% chance of being right. SPY predictions tomorrow. I don't do SPY. Buy a call, same time Friday. Yeah, I got that one. Drunken Hazard. Not yet. There you go. Ease. When you does blah, 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 blah. Okay. You got to stop asking me that same question. You put together your own dividend stock company list or borrow the list. Cliff. Here, I'm going to go really quick. Here's the list. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Like being the store owner, sell the options always. The store owner will always walk away with the money. Yep, you're absolutely right. Neo. Okay, Yamaha has hydrogen outboard motors. Okay, I'm going to repeat what I said a few minutes ago. I have never, wait a minute, I've seen it once, hydrogen tanks, but it wasn't a gas station. Nobody could just walk up there and say, hey, fill me up with some hydrogen. No, I've never seen a hydrogen dispensary store. Why is it that every time I look your dividends on YouTube, someone is trading SPY? That ain't me, dude. Seriously, ain't me. You know what? Let's take a quick look at spiders and I'll tell you why I don't like them. Okay, let's go to Yahoo Finance. Let's put in spiders, SPY. There are several reasons why I don't like SPY. Here we go. You ready? Spiders, S&P 500 ETF Trust. Okay, right there. Down here are the numbers. Let's go all the way back. I don't want to go back too far because this thing has been paying dividends for a long period of time. I just want to go back far enough. I want to go back far enough just to give you an example of why I don't like it. Okay? Let's go back to 2000. In 2000, the dividend was 37 cents. And then it dropped to 35. I didn't say it increased. I said it dropped. Then it went to 38, to 41, and it dropped to 32. Again, it dropped. That means it's not increasing. It goes up and then it goes down. Why would I invest my money into something that goes up and then goes down? No consistency there whatsoever. But we're only on 2001. Okay, 35, 37, 39, 33, backwards, 35, 38, 44, 35, backwards, 36, 40, 52, 40, backwards, 41, 47, 35, backwards, 57, 30, 47, backwards, 49, 52, 67, 52, backwards, 56, 58, 79, 55, backwards. It goes up, it goes down, no consistency whatsoever. But wait, it gets worse. You guys might be tired of hearing me saying it. It does, it gets worse. Let's go take a look at the summary for the spiders. Okay? Now, you may like the spiders. I certainly don't. Now, do we understand what a yield is? It's when you invest a certain amount of money, you get a certain amount of money back. They call that the yield, or the rate of return. Currently, the yield for the spiders is, are you ready for this? 1.21. Explain to me in a manner in which I will understand why you think 1.21 is better than 50. Okay, I make 1% a week, which is over 50% per year. 1.2 has nowhere close. They have what's called the rule of 72. Sounds more like day trade. No. Okay, it's not day trading. Kind of like weekly trading. All right? So, when I say I average 1% a week, where are we? Let's quickly take a look. Okay? 2.8, 3.15, 2.85, 3.36, 2.26, 5.2, 3.7, 1.5. Whoa, look at this one. Negative 0.15. I actually lost once. 1 week this year, I've lost. 0.6. See, I don't make 1% every week. 0.6, 0.6, 1.2, 0.7, 1.2, 2.6, 1.1, 1.19, 1.2, 1.5. They're all there. Take your time, read them over. Now, this is just this year. Okay? Now, I have these silly little things that look just like this all the way back to 2011. I have no problem showing them to people. Nice. You like that, Ricky? Okay, look. MPW, CVS, Kohl's, Marathon, Walgreens, Mara, Kohl's, CVS, MPW, Ford. This is just 1 week. Okay, here's the dates right here. 6/24, all right, 8/6/24, 8/6/24, 8/6/24, 8/6/24, 8/5/24, 8/5/24, 8/5/24, blah, 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 blah. Okay? These are all the trades I do. And that's just for that week. Okay, look, here's another one for this week. Look at this one. That was a busy week. CVS, MPW, Dell, Intel, Walgreens, DFS, Kohl's, Walmart, CVS, Ford, Kohl's, MPW. Now, probably the only one you probably never heard of was probably MPW. Because I didn't hear of MPW until I saw it on Warren Buffett's list. And then, hey, if it's good enough for Warren, why the hell not? Okay, Spidey wants to take a look at NIO. N-I-O. Don't ask me why he wants to take a look at NIO. But NIO does have, check it out, weekly options. Okay, so let's go back to Yahoo Finance. Ricky, you love it. I like it too. Let's go back to Yahoo Finance and put in NIO. N-I-O. Because I've never invested in NIO. Okay, and here's the reason why. Right here, look. Forward dividend and yield. They pay no dividends at all. So why, Spotty Crow, why would you suggest me to take a look at something that you know has no dividends? Real estate for hospitals. Oh, cool beans. Eves, buy a call, sell the same call on Friday. Okay, I don't know how many times you need to say that. Honey Badger, I'll remove the pen from every troll. Honey Badger, I appreciate that. I really do. However, you have not been here long enough. Now, I have 3 moderators here, and they've been here for over 4 or 5 months. Okay, James, you are showing volume with your charts. Oh, no, yeah. Well, yeah. Hold on a second. Whoops, hit the wrong button. Sorry about that, Mr. Holiday. Holiday? Mr. Holiday. Hey, how are you doing today? Am I showing volume? Okay, right down here. See this blue down here? That's volume. Okay? Now, if you actually want to see the volume in numbers, okay, I could go over here. Where is it? Where is it? Where is it? Where is it? Right there. Come on. And here we go. Okay? Chart. Here's a separate chart with just the volume. Now, volume doesn't really play that big a part in this trading strategy. Remember, Neil, this was created for a 9-year-old. It had to be simple, safe, predictable, and consistent. Mr. Ha all day, how are you? You're welcome for the information. I'm here. Ask anything you want, I'll help you out. Adam, what does the red and green mean on your trades? Well, the green is when I'm buying. The red is when I'm selling. So if you take a close look, right here, where it says covered by 200 shares, okay, of Intel, sell 2 contracts of Intel at $20.50. Okay? The red means I already have those positions. And see where it says right here? Sell 3 contracts, CVS, 16 August 24, the $59 call at 27 cents a share. Okay? The green is where I'm buying. The red is where I'm selling. Okay, they're all self-explanatory if you know how to read them. Okay, here's the timestamp over here. Okay, this is what the trading strategy was, whether it was a buy or a sell. This is the quantity. This is either to open a trade or to close a trade. This is the actual stock symbol. Now, these are the dates of the options. Okay, remember, I trade weekly options. Okay, basically all these, 16th August, 16 August, 16 August, 16 August, 16 August. Here's where I rolled forward, where I bought the 16s and I sold the 23s. I rolled it forward. We're going to explain rolling in a few minutes. Okay, so let's keep on going. Hopefully that answers that question. Half of the wheel, basically. Ricky, you're absolutely correct. But Ricky, what you're missing. Now, I love the wheel strategy. I really, really do. Okay, a cash secured put. This is what Ricky's talking about over here on TikTok. Benji, cool beans. Got a new member, Benji. Woohoo, Benji. Anyway, over here he's asking about the wheel strategy. The wheel strategy is basically when you do a cash secured put, which basically the exact same thing. You're taking a big chunk of your money, you're putting it aside, you're getting a weekly return on it. Great, wonderful. What am I doing with covered calls? I'm taking a chunk of money. Do you ever go FOMO for selling the call at the strike and watch it go up? Refresh me, what's FMFO mean? Oh, the wheel strategy. Okay, so the wheel strategy, selling a cash secured put. Yeah, great strategy. Let's make some trades. Yeah, we're going to make some trades as soon as I finish up with some of these questions. Fear of missing out. Oh, Paul. Fear of missing out. F-O-M. Fear, whatever. Fear of missing out. F-O-M-O. Yeah, you're always going to have that every single week. You're going to see something and say, damn it, I missed that one. But try to get, the biggest challenge is beginner traders. There's several of them. Number one is using the wrong terminology. Buying when you should be selling, selling when you should be buying. That's one. Number two, hitting the wrong button. It sounds silly, but I have done it 4 times this year. I've hit the wrong button. Okay? Let's keep on going. Little Boo Peep lost his sheep. Okay, whatever. Buy call, yep. What do you think about NNN? Hell no. NNN. What the hell are you thinking there, brother? Xbox, no. Okay, when I say 20 years of increased dividends, trolls, yeah, no. Xbox, no. What's up with Walgreens? Hey, let's take a look at what's going on with Walgreens today. I actually like Walgreens because I have Walgreens. Now, Walgreens, the high, the low, where was it, where is it, blah, blah, blah. Topped out at 37. We're currently down at 8.96. Now I'm into it at 12 and I sold the 9s. So right now it's at 8.96. The 9 is going for $9. And look at this, 19 cents. That is a 3% trade. But the question you need to ask yourself, and it's a big question, is do I like Walgreens? And do I like Walgreens at this current price? That's a big one. Because look what she's done. The last 30 days, right there. Here we go. Last 30 days. Okay? Here's the high, $9.50. She drops down to $8.80. Then she shoots up, pulls back. Here's the bottom. Now she's shooting up. Where do you think she's going next? She's coming down. It's plain to see. It's like a seesaw at the park. She goes down, up, down, up, down, up. That's all they do. But why don't you sell puts to enter? Ask Jeeves. Great question. Now, ask Jeeves. I'm going to tell you the same thing I told this gentleman over here. The reason why I don't do why I don't teach cash secured puts here first. Okay, I didn't say I didn't do them. I said I don't teach them here. And the reason is, when I created the trading strategy for my 9-year-old back in 2008, it had to be simple. Safe, predictable, consistent, and no way to lose. Yeah, puts, they're very complicated. They are. And it requires obligations. Okay, so I didn't need to clutter up her little mind with stuff she didn't need to know. So no, I don't teach selling cash secured puts here. I do them, but not here. Fleece your mother, then go to bed smiling. That's funny. GLW. Why does that sound familiar? Why does GLW sound familiar? GLW. Corning. That's why I do like Corning, but not for this week. Look where it is. It's actually almost at the high. All right. Antonio. I'll rewatch the live to see why he doesn't sell puts to enter. Have a great evening. Keep it up. Well, I just told you why I don't. Okay? I teach the exact same trading strategy as I taught my daughter 15 years ago. Okay? I come from a group of people called the X generation, Generation X. Okay? If it ain't broke, don't mess with it. Simple. If it ain't broke, don't mess with it. MU Adam, we already took a look at Micron. AAP is why I'm wondering about rolling forward. Larissa, awesome. I don't have any AAP, but Larissa, if you want to drop me your number, I'll give you a buzz in the morning and I'll walk you through it. Ricky, what were you saying about rolling your calls? Ooh, great idea. Let's take a look at a roll. How do you do that? Let's take a good look. Let's take a look at JWN. Okay, JWN, I actually bought some this morning. JWN, here we go. Nordstrom's, as you can see. Here's what we're looking at this morning. Down, up, down, up, down, up, down, up, down. Now she's going up. Great, that's why I bought it. Yeah, I'd like to see what a roll is. Well, here we go. Now, currently this morning for JWN. Okay? JWN, in this particular count, I bought 1,500 shares at $22.65. Okay, $22.65. I sold the 2250 calls for 31 cents. That's over 1%. Okay, great. Now, let's say hypothetically speaking, the stock drops. Ooh. Or wait, the stock shoots up and the value goes up and I don't want to sell it. I want to... Oh, shit, I got to sneeze and it just doesn't want to come up. Oh, what the hell was that? All right, let's show you how to roll it. Now, hypothetically speaking, okay, I collected 31 cents this morning. Now it's worth 15 cents. What does that mean? I sold it for 31. I can now buy it back for 15. I just doubled my money. Do you see how that happened? Okay, I sold it for 31. I can buy it for, it's kind of like buying it for 15 cents and selling it for 31. Well, that's doubling your money. Well, if I sell it for 30 and I buy it back at 15, that's still doubling my money. Anyway, I'll show you how to roll it, because right now it's worth 15 cents. Okay? And the option expires this Friday. So watch what I'm going to do. I'm going to right-click here. Okay? I'm going to right-click here and all this opens up. Well, I want to create a rolling order. There it is right there. So I'm going to buy back this week's and sell next week's. Okay? So what does that look like? All right, see down here where it says JWN October for October, the 2250 calls. Okay, and I'm going to sell the 11 October 24 calls. So I'm buying back this week's and I'm selling next week's, the exact same call strike, exact same one. Uh-oh, I gotta prove I'm human. There we go. Drag the puzzle piece, okay. So I'm buying back this week's and I'm selling next week's, and look at this, I'm getting a 29-cent credit. Well, it's a $22 stock, a 29-cent credit, that's another 1%. Now I already got the 1% for this week. If I sell next week, so the first I have the shares, then you sell the calls, and tomorrow just buy them back. Something like that, okay? Now, I already sold, I bought the shares this morning. Wait a second, hold on a second. Whoops. JWN, right there. Okay, right here. 9:30, which is today. Okay, 9:30, which is today, a covered call. I bought 1,500 shares to open, JWN, and I sold 15 contracts for October 24, the 2250. I bought it for 2265, okay, and I sold at 2250. Well, yeah, I'm losing 15 cents right off the top. Big deal. I take it off to 31, so I profit 16 cents a share. Okay, fine. Now I've already collected the 31, right? I've already collected it. That's already in my account. So now, this other trade that I just showed you, this trade here, okay, this trade here, the one I just showed you just now, I'm buying that, what I sold this morning. I sold it for 31. Well, now I'm buying it. It doesn't tell me what I'm buying it for. And then I'm selling next week's 2250 and collecting a 29-cent premium. So I'm going to say, hell yeah. I'm sending it off. Okay? I'm selling 15 calendar JWN 100, those are the weeklies, 11 October 24. I'm buying back for October 24 the 22.5 call option at 29-cent limit order to open to close. To open to close, what the hell does that mean? Well, I'm closing this order for October. Okay, you can't just move from one to the other. You have to buy it, and then you have to open it, and then you have to close it. Do you normally set limits when you buy? Okay, no. Normally, when I buy for the first time, I do a market. I do the market call, right at the money, right at the market. Okay, but when I'm selling an option, then I do it at limit because that's what I want. I don't want anything less than 29. Now, what am I collecting? Well, I'm collecting another 415 bucks for that one trade. One click of the mouse is going to give me 415. Now, remember when I say I want simple, safe, predictable, it's actually telling me what I'm going to make before I even do it. Predictable and consistent. So I'm consistently getting 1%. That's what I'm looking for. Consistency, predictability, and safety. Daddy, you looking for cash flow? I'm looking for cash flow. Daddy, way to go. Alrighty. AAP is why I'm wondering about rolling forward. So Larissa, if you own your AAP, like I told you, DM me with your number. I'll give you a call. I'll walk you through it first thing in the morning. You can basically do the same thing. Now, I don't know what your account looks like, so I'm just, off the top of my head. Whatever you bought the stock for, that is yours until you decide to sell it. If you sell a covered call against it, well, that stock is locked up until you close out that position. Okay, user 361817619917. What the hell were your parents thinking when they named you? Seriously, think about it. 1% a week is amazing. When you look at it 5, 10, 15 years, yes, it is. Ooh, you think that's amazing? Check this shit out. You're going to love this. Let's go back here. Let's go here. Now, this is my website, The 10-Minute Trader. It may sound familiar to some of you guys. Simple, safe, predictable, 1% per week. Live nightly training, 9 p.m. Okay, Twine, you're gonna like this. Hold on a second. About me, blah blah blah, all that kind of nice, neat, fun stuff. But what I want to show you is right here. Okay, go to my website, weekly compound interest calculator. Nobody else has this, and the reason why I say that, because I had to create the damn thing myself because nobody else had it. Adam, check this out. Adam, you're gonna love this. Watch this. Weekly compound interest calculator. Let's say hypothetically you start out with $100. I mean $1,000. You deposit $100 once a month. Let's change this to monthly. And we're going to change this 2% to 1% because I don't think you guys are quite ready to do 2%. So we'll do 1%. 1% a week. Okay? Now, the time frame, we're going to look at 10 years. So if you consistently do this, 10 years. Now, let me read the numbers to you again. Start out with $1,000. Put $100 in once a month at 1% per week for 10 years. $609,000. How much did you put in? You put in $14,000. That's it. $14,000 is your investment, and it grew to $609,000. That's at 1% a month. 1% a week. Okay. Now, if you do 1% a week, that's when it gets nuts. Look at this, 1% a week. Read it to you again. $1,000. Start out with $1,000. Put in $100 a week. Okay, at 1% for 10 years. What is that? 1.9 million. How much did you put in? 53,000. I loved it. I had to create it myself because nobody else had it. Okay, let's get out of there. All right, out of that. Out of that. Okay, that. Okay, I think I covered everything I told you I wanted to cover. Looking for cash flow, yep. Whoops, hit the wrong button there. NNN's no, sunshine, cash potion, I don't know how to do options, but I know how to use dividends. Okay, Michael, options are pretty easy. Okay. Now, without options, this is what you're going to see. JWN, the last traded price or the close. The bid, the ask, the volume, the open, the high, the low. Okay, down here, you will not see options unless you are approved for options. Once you are approved for options, here's how it goes. If I buy the stock at $22.77, because that's the current price at this moment, the closest strike price to $22.77 is going to be either the $22.50 or the 3. Now I can't do this one because the numbers aren't there. And I hate it when they don't put the numbers there. But usually, if you buy it for this price, sell this strike price, you get to collect this. And that will give 1% or more. Do you ever go all in or always do have certain percentage or amounts for your first buy-in? All right, Brendan, I like to have the risk spread out. So if I have $100,000 on account, I like to do 4 or 5 positions. 4 positions, it's 25, 25, 25, 25. 5 positions, it's 20, 20, 20, 20, so on and so forth. Okay, Bama Redneck, BTTs. What the heck is that? So the bid is what is collected. Correct. See, the bid is what you're selling. The ask is what you're buying. So if you're a buyer, you're going to pay the ask. If you're a seller, you're going to collect the bid. It's the exact same with the stocks. If I am buying the stocks, I'm paying the ask price. If I'm selling my stocks, I'm collecting the bid. Okay, Bama Redneck, BTTT. What the heck is that? BlackRock. Come on, Redneck, you know better than that. BTT has no options. Why were we looking at it? You know better than that. Butterfingers, G-Niles, what's happening? So Michael T. Justice, if you're really interested, really, DM me your number. I'll give you a call in the morning. What do the Greeks mean? Oh boy. The Greeks, they're just a bunch of numbers to confuse you. Seriously. If you really need to know them, there's a book, it's called the Black-Scholes Standardized Pricing Model for Options. Okay? Now, I really don't want to get into it because they really have nothing to do with what we're doing. I know what they are, but they have nothing to do with what we're doing. So it'd be kind of like useless information. Haste makes waste, pressing wrong buttons. Hello from Jennifer. How are you doing? Yeah, Jennifer, trust me. I've been trading for over 20 years. This year, I pressed the wrong button 4 times. Do you ever buy on a Tuesday instead of Monday? Yep, when Monday's a holiday. Then I buy on a Tuesday. Think of it this way. Blueberry, how are you doing? I haven't seen you in a couple of weeks. Think of it this way. Hold on. I am good with that. No need for more confusion. Yeah, trust me. The Greeks are confusing as hell. Studying the Greeks, and then once you study them, you understand them all. Once you start trading, you think, well, what the hell did I learn that for? I don't need it. Nothing is wrong with it if the numbers work. Yeah, you're right. Brendan Sweet, blah, blah, pressing the wrong button. Yep. Okay, I'll keep going. How much are you playing with? Well, I just showed you 3 accounts. Okay, so apparently you weren't paying attention. Splash page. Oops, get out of that. Go back up to the top right here. Okay, account number 1. I started out in January at 117. It's currently at 142, and I've already taken out over 30,000. Okay, so I live off the interest. I told you that. Account number 2, 100,000 cash, 100,000 margin. Account number 3, 100,000 cash. Okay, and all the trades are right here. So you can look at them and figure it out yourself. Okay, Dell, Walgreens, Ford, MPW, Intel. Look at it, Intel and Dell for that 1 week. Cool. The numbers are all there. Okay? I don't hide anything from you. Dollar value doesn't matter. The percentage is what really matters. Absolutely right, 86. I love it when you come up with answers that I don't have to worry about. I dropped service as soon as you started showing the roll process. Stifler's mom! How's it going? He shows about 350 in 2 accounts. Actually, at Redneck, it's 3 accounts. I'm up to 3 accounts now that I'm sharing with you guys, see? 1, 2, 3. All right, where were we? Yeah, all right, down. I feel bad. Your 9-year-old got this, and I'm lost. Oh, Michael, here's the interesting thing. Adults have a tendency to make things complicated. Let me show you a couple examples and see if you can grasp it. All right, so let's go here. Here we go. All right, now I'm going to float through a few of them and you tell me if this is complicated or not. Now, considering September, we're going into October, right? Yeah, here we are here. Okay, so let's go move 1 month right here. Here we are in October. Okay, so let's take a look at these right here. 1, 2, 3, 4, 5, 6, 7. 7 companies. Watch how quick I go through them. Now, first thing you got to know, a company never, ever makes it to my calendar unless I have vetted it, unless I have taken a look at it. Are they consistently profitable? Do they have weekly options? What's the book value? What's the cash flow look like? Do all your work first and then throw it into your calendar. And every 90 days, Clorox is going to show up. Every 90 days, Hormel's going to show up. Cisco, Comcast. These companies will show up every 90 days because that's how often they pay their dividends, every 90 days. So this week here, this is all I want to look at. This is it, and that is it, and there's nothing else. That's it, and that's all. Okay? John Deere, Fifth Third Bank, Mendeley's, U.S. Bank, Cardinal Health, Comcast, Cisco, American Express, Bristol Myers Squibb, J.P. Morgan. I honestly could care less about everything else. These are the only ones I want to look at. Now, let's take a quick look and see how that works. Now, you've been here long enough, you get an idea of what's going on. First thing we'll look at, John Deere. Okay? DE, John Deere. Up. Too high. High of the year. No. Fifth Third Bank. FITB. It's a monthly. No. Mendeley's, MDLZ. MDLZ. Nope. I want it to turn around, go back up. See that? It's going to drop another couple days, and it's going to turn around, but I do like it, so we'll look at it a little bit later. US Bank. USB. That one looks good. Okay? High, low, where was it, where is it, what direction is going? It's currently at 45.75. The 45.50 is going for 66. That is over 1%. Great. A year ago, we're at 32.72. We bottomed out at 30.55. You have a double top at 47.33. The last 30 days. Okay, 30 days ago, here's the high. Okay, 2 weeks ago, here's the bottom. She shoots up, pulls back. Look at 3 days to the upside. 1, 2, 3. Great. 45.73. I like the 45.50s. Let's change this to covered call. The 45.50s, there it is. Change this to a market order. There we go. Confirm and send. Here's what it sounds like. Buy 10 covered calls USB 100s for October 2024. That's this Friday. The 45.50 call option on the US Bank, blah, blah, blah. My profit, $455. What is it costing me? $45,000. Okay, get my calculator out. Clear that. My profit, $455. I divide it by what it's costing me, 45,051. My rate of return for the week is 1%. That's exactly what I'm looking for. 1% trade. That's your first one. Quick, easy, simple. Okay, what did I forget? I forgot to do the seasonality. What does this stock normally do this time of year? I forgot that. Seasonality, what does it normally do? We can all tell what that means. Seasonality, it usually goes up this year. So for you guys who like US Bank, there you go, an invitation. Look at that run up. Now, seasonality is not guaranteed. It just gives you a rough idea what it's done over the last 10 years. So, that we went through 1, 2, 3, 4. Cardinal Health is next. Let's go back here. Hold on. Cardinal Health. CAH. Okay, first thing I want to see. The high, the low, where was it, where is it, what direction is it going? I like this area right here. That looks good, wonderful. 111 currently. The 111s are going for 60 cents. Too bad, so sad, not enough money. Next on the list, Comcast. I love Comcast. CMCSA. Ooh, look at that, 30-day high. Sorry, I don't buy at the high. It goes, yeah, no. Okay, next on the list, Cisco, CSCO. Isn't that a monthly, CSCO? No, it's not. So Cisco, yep, monthly. Look at it, way too high. Okay, next on the list, American Express, AXP. Too high, high of the year. JP Morgan. JPM. Ooh, I like it. Look, the high, she comes down, she bounces right there. High, low, where was it, where is it, what direction it's going? 210, the 210s are going for 203 to 242. You might be able to get your 1% there. Okay. So we have a year ago, 143, bottomed out the end of October at 135. You got your high on the 30th. 30 days ago was a 30-day high at 225. A week later, there's our bottom on the 10th at 261. Look at that little swoop. She goes up, and here we are right now, going to the upside, 210. Now, what does JP Morgan usually do this time of year? Well, this time of year, take a look. JP Morgan, it's pretty plain to see, a slight trend to the upside. Okay, so we like JP Morgan. And what do we like it at? Hold on, let's go back to here. Get rid of that. So we like JP Morgan at 210. Wait a minute. Yeah. Okay, let's see what it looks like. 210. Covered call. The 210s right there. All right, let's get rid of that. Okay, I want to buy 200 shares. 200 at the market. There we go. Okay, this is what it looks like. Buy 2 covered calls. JP Morgan 100. Those are the weeklies for October 24. The 210 call against the stock price. Blah blah blah. Let's plug this one in before she dies. All right, there we go. All right, so let's get my calculator out. 273 is the profit. 273. What is it costing me? 41,000. Ooh, that don't look good. 728. That's 0.6. Nope, that doesn't work. So far, we only found one. We didn't like JP Morgan. Bummer. Okay, so that was JP Morgan. Next one on the list, Bristol Myers Squibb, BMY. BMY. Too high. All right, so we just went through 8 stocks. Out of all 8, I only found one that is acceptable. Okay, is it really that difficult? You go through your list, okay? I just look at this one list here. Now I have about 8 lists, and I spend about 10 to 15, maybe sometimes 20 minutes to find a good stock. GME, great, yeah, no. Sorry, dude. GME, GameStop, does not have 20 years of increased dividends. No. Okay, so I have about 8 or 9 different stocks, lists. So we just look at these ones right here. So if I don't find one, great. Or maybe I'll look at one that I already went by. I missed a bunch. How often do you vet a stock to determine if it should to be? Okay, Jessica, that's a great question. Here's the thing. I don't have to do it. Because guess what? The beginning of January, somebody else takes care of the Dividend Kings list. Somebody else takes care of the Dividend Aristocrats list. Okay, all these lists are managed by someone else. So when a company gets thrown off of the Dividend Kings list, like 3M got kicked off the list this year, but I'm going to continue to trade it because 3M has increased its dividends for 67 consecutive years. This year they ran into a little bit of issue, so the CEO decided to cut the dividends for the first time in 67 years. Do I take it off my list? No. Because they're done 67 years, just because the CEO is an idiot, I'm not going to get rid of my 3M off my list. Okay, I rolled my Siri from last week to this week, 24 strike. Was that a good move? Okay, user 27610663633901. Yeah. Steve, I'm going to call you Steve. I don't know, because I don't know anything at all about what you're holding and what your goal is. Okay, and I have no idea what you bought it at. So there's a lot of unanswered questions there that the only way for me to understand exactly is to bring you on live, either take a look at your account over your shoulder and take a look at what you're doing. Okay, so if by chance you bought it at 24, you sold the 24.50s, and it was too close to where you want it was, what is Siri at the moment? Hold on. S-I-R-I. Siri at this moment in time is at 23.65. And you sold the 24.50s. Okay. Well, she opened up this morning at 24.34. Okay, if you sold the 24.50s, what are you worried about? I would just leave them personally. I have no idea. I'm not looking at your stuff. I'm just looking at this right now. I have no idea what you bought it at, so it doesn't really help me. But currently, she's at 23.65. 30 days ago, she was at 33. She bottomed out here, went up, pulled back, 3 days the upside. But today, she pulled back a little bit. I was thinking of getting the Siri this morning, but I decided not to because she started to pull back today. I had 300 shares of HML and unloaded for 19 over 3 weeks. Too much capital versus reward. Okay, Flipper, I'm not quite sure what you're talking about, but okay. Should I buy more SCHD before the split or after? Okay, next door, I don't like SCHD. We talked about this several times every week, at least 2 or 3 times a week. I say how much I dislike SCHD. And the reason why I don't like SCHD, First and foremost, okay, I want to take a look at the historical data. I'm going to show you how well SCHD has increased their dividends. Dividends only, the maximum amount of dividends they have available. Let's go all the way back to when they first started paying dividends. 2011. I like 20 years of increased dividends. SCHD first started paying dividends in 2011. That's only 13 years. 13 years. Now, if you're okay with 13 years of dividends, fine. But let's see how well they increased their dividends. 12 cents, 14 cents, 21, 21, 26, 20. Wait a second, that's going backwards. From 26 to 20, that's a decrease of 6 cents. Granted, that's not a lot, but that's a 20% decrease. So I'm going to invest some money you're going to invest some money with me, and I'm going to give you X amount, and then next year I'm going to give you 20% less. Yeah, no thank you. Okay, so it went backwards. 23, 23, 25, 25, 27, 25 backwards, 28, 27 backwards, 31, 30 backwards, 27 backwards, 30, 32, 24 backwards, 25% decrease. From 32 to 24 is a 25% decrease. 40, 33, that's a 7 cent decrease. That's a little bit like 8% decrease. 33, 35, 34, 35, 26 backwards, 11 cents. That's a 30% decrease. And wait, it gets worse. It does, really. Let's go to the summary. Okay, so there's no consistency whatsoever with SCHD. Okay, next lower, no consistency with their dividends whatsoever. The yield. If you invest your money into SCHD, you can look forward to a wonderful return of 3.35. 3.35. Explain to me in a manner which I'm going to understand why you personally think 3% is better than 50%. It boggles my mind sometimes. When people ask me, should I invest more money into SCHD? Well, it tells me you ain't read shit. Why would you invest at 3%? You can buy government bonds that pay 5%. Why are you investing at 3%? Dude, look at your numbers. The numbers don't lie. 3%, yeah, no thank you. All right, let's keep going. How often do you bet a stock? Once a year. What do you think about Matex? I've never heard of them. Austin, how are you doing? Ooh, we got 2 minutes left. Matex, what the heck is Matex? M-A-T-X. It's a no is what it is. Okay, Albert, when I say 20 years of dividends increases, consistently increasing for 20 years, and weekly options. Apparently you missed the part where I said weekly options. Monthly options, the numbers just don't work. Okay, I don't want to go into the explanation. It's 11:30. Okay, if you guys don't like, share, comment, all that kind of stuff, and get us over 200, I'm leaving in 2 minutes. Where are we? How about APA? Adam, that's a good one. That one is, APA is Apache. APA. APA Corporation. It's not Apache? Yeah, it is. Apache. Okay. High, low. Where was it? Where is it? What direction is it going? It's bouncing off of this. It's currently at 24.45. The 24.50 is going for 47. That's just a little bit under 2%. But is it the right time to buy? Okay. The high, 43.67, was the end of October last year. She drops, finds the bottom right here on the 11th. So the last 30 days, here's what the last 30 days look like. Okay, 30-day high, 29. She drops down to 22.75, pulls back up, drops back down. 1-2 days to the upside. Well, great. If tomorrow is an up day, if tomorrow opens higher than 24.46, I'm all in. Do you only roll on Fridays, or would you roll early at the stock? Yep. Okay, I look every day. Okay, now if the option I sold is worth less today than it was yesterday, I'll take a look at rolling it forward to see what I can get. If the numbers work, then it's a yes. Okay, I don't really care if I roll on a Tuesday, Wednesday, or Friday, or Monday. I don't. As long as the numbers work and they make sense. Albert, we looked at MATX. That's a no. And Nextlore, SCHD, makes me want to vomit, but thank you for sharing. How often do we already did that one. Max does do weeklies. Wait a minute. Okay, thank you there, 86. What about AAP? We looked at that one earlier. Sinbad, were you on this morning? Yes, I was. I didn't see you, but that's okay. What about AAP? We looked at that earlier. MU, we already looked at that one. Sorry, Carlos. Shirayuki, how are you today? Walgreens, good for dividends. I like Walgreens, and I have a lot more Walgreens than I probably should. What do you think about MU, Micron Technology? Carlos, we looked at it earlier. We looked at Macy's earlier. SCHD, hell no. Jennifer, oh, Jen, you're going to make me lose respect for you if you mention SCHD again. Okay, please take a look at the numbers for SCHD. Once you take a look at it and you say 3.2%, hell no. Why would you put your money into something paying less than what a government bond is? A government bond is over 5%. SCHD is at 3%. Hell no. Tomorrow, negative earnings for Nike. Alejandro, ¿qué pasa, amigo? ¿Cómo está? You like Nike? Cool beans, Nike. Nike, NKE. So Nike's going to be a no, dude. Take a look at it. 30 days ago. Where are we? Where are we? Right here. Okay? 30 days ago. Take a look at this. 30 days ago, 83. Drops down to 77. Shoots on up to 91. 2 days to the downside. Where do you think it's going? Seriously, think about it. If you were an investor, okay? If you're an investor and you own Nike at 77 or 78 or even 80, and she shoots all the way up to 91, are you going to hold on to it and say, hey, I want to see if it goes higher? Or are you going to take your profits? I don't know about you, but it ain't a profit until you take it. And here's something you may or may not know. Nobody ever went broke taking profits. Do you look at the volume in case it's liquid? No. I didn't get, Laurie, you didn't get the link this morning. Laurie, we had a lot of issues. You're not the only one. A whole bunch of people didn't get the link this morning. Something's wrong with Patreon. We are working on a new email system, so it will be redundant. So if it works, you'll get one from Patreon and you'll get one from the 10-Minute Trader. Okay? So you'll actually get two. That way, at least one of them will work. Wednesday morning, Nike will open up stock card. Okay, thank you for that, Alejandro. Heard people selling stocks. Yep, people are always selling stocks. Were you on this morning? Sinbad, yes, I was. Liquidation portfolio, blah, 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 blah. WBA, we looked at that one. I just bet $20,000 on Donald Trump to win $40,000. Well, good for you. Not quite sure what you mean. I didn't get the link this morning. Laurie, a few people didn't get that. We're working on that website to check which companies pay dividends. Google. It's simple. Go to Google, look up the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. Okay, they all pay dividends for over 20 years. Trim Cons went up. I have no idea what Trim Cons is. Tomorrow at 9, the PayX reports will be negative, but the rebound will be good. Okay, I don't pay attention to that, but all right. So, yo, ABR, I have no idea what that is. Top 3 dividend stocks, Macy's, Nordstrom's, and Kohl's. Thank you. How about Dollar General? Love Dollar General. I did. Ryan just bought 100 shares of Ford. Cool beans. I got Ford. How many shares of Ford do I have? I don't even know. Ford. I've got 1,000 shares there. None there. Whoops. And none there. Well, alrighty. So I got 1,000 shares of Ford. Whoops, I missed that question. I just had converted conversation chat about GPT about Dividend Kings and Aristocrats. Cool beans. All right, it is 11:35. Pep Boys, what would you recommend? Education is what I recommend. Learn as much as you possibly can. Go to as many places and get as much information as you can. So it is past 11:30. You like Dollar General, and that thing tanked. I didn't lose any money on Dollar General. Why do you focus on yield versus dividend growth? Is it because of the stage of investment you're in? Matt, how are you today? Okay, Matt, I could care less about the yield. Seriously, I could. Okay? I like dividend growth. I like 20 years of dividend growth. Okay? Dividend Kings, 50 years of increased dividends. Dividend Aristocrats, 25 years of dividend increases. Dividend Champions, 25 years of increased dividends. Dividend Contenders, 10 to 24 years of increased dividends. I could care less about the yield, really could. I care about the consistency of the increased dividends and weekly options. Okay? Banker, did you just hear me? Increased dividends and weekly options. Thanks for the response. New follower here. Matt, keep coming back. We're here every single night, 9 p.m. until 11:30. It's past 11:30, so I'm out of here. You guys have a great night, and we'll see you again tomorrow because the sun will come out tomorrow. Wipe away the cobwebs and the sorrow till there's none tomorrow. Tomorrow, we'll see you tomorrow. You're always a day